Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual, guys, this is not financial advice. Please do your own due diligence and research. So Neo stock has been going down, but the company has been improving year over year, week over week, month over month. We are in a profitable quarter as we speak. We're just waiting for the earnings report to come out for the fourth quarter to reflect that. To certify that, to validate that. But while that's happening, the manipulation continues on Wall Street, where they are pumping other stocks and telling you it's a buy based on what they might do in the future, but telling you should sell your shares of NEO and dragging the price down and manipulating the numbers. So the retail investors are panicking and selling right at the time where they should be buying because the company, like I said, is in a profitable quarter and will be growing at an exponentially incredible rate next year. This is just history repeating itself. This is the way they have been programmed to stay poor, where, as usual, the way the game is played, the big hedge funds, pension funds, and so on are jumping in and buying. So we found out that 2 Sigma bought over 2 million shares of NEO in the third quarter, and they're headquartered out of New York, America. Yes, buying into a Chinese company. A Chinese company. China is uninvestable, they told us, but they're buying. Also, we found out that BNP Paribas bought 140 million shares in the third quarter while they were telling you don't buy. Their headquarters in France, not China. But they're telling the whole world, retail investors, China is uninvestable. It's a communist country. It is bad. You should not put your money there. But they're buying. This is the way the game is played. Now we just found out that Jane Street jumps to the third largest neo-institutional investor with a 18 million share purchase. Again, Jane Street Group, which has held a position in NEO since the company went public in late 2018, has increased its holding in the EV maker to a record high of 19.2 million shares during the third quarter, while they were telling you don't buy. The New York-based asset manager has disclosed its quarterly portfolio. Yes, not in China, not Japan, not Singapore, New York-based. Whilst Bloomberg and the rest of them, Yahoo Finance, telling you the company is burning through cash, it's don't touch it yet. That Pupavosian is telling you all, and he wrote a book. But yet, New York-based asset manager has disclosed its quarterly portfolio with the SEC, according to which it has acquired 18.7 million shares in the company between July and September. The firm has been reducing its stake, but now started buying back in heavily. But why is that? Jane Street first invested in NEO in the fourth quarter of 2018, purchasing 115,929 shares valued at $738,000. But now they just bought into NEO 18 million shares, bringing them to the third largest institutional owner. So whilst they're telling you that this is an uninvestable company and you should not invest in China, the economy is spiraling downwards, they say. And I talked about that many times on this channel. Every time they say that China grew its economy by 5% plus, they're buying. The 19 million share stake is more than double the previous record of 8 million shares, which was set in the first quarter of 2024. The first quarter of 2024, they were also buying. Whilst the Tatavosian and the rest of them is telling you don't buy, Jane Street Group disclosed it has open position in 6,877 companies with a portfolio worth over $83.5 billion. The firm owns 4.5 million shares in Tesla worth 1.8 billion, but you saw how much they bought into NEO. Jane Street position in Rivian is 84,733 to 7.1 million shares During the third quarter, a total 476 investors collectively hold around 316 million shares in NEO as of Monday. As of the third quarter, the EV maker largest institutional shareholder was Aspects Management, which bought 35 million shares during the quarter. They are now valued at $215 million. UBS, which is NEO's largest investor, slashed its position by nearly 59%. But why is that? Well, you see, this is the way the game is played. When you hear that they slashed by 59%, you're thinking you need to sell. But the rest of them are also buying, making way for their friends to buy. Jane Street Group, which places third amongst NEO's largest institutional investors, has a stake that is currently worth nearly $118.5 million. By the end of September, the 19.2 million shares that the firm held in NEO were valued at $146.5 million. So this is the game I always told you guys is played. Never focus on the share price and panic. Always look at what the company is doing, like the great Warren Buffett has said in the past. It's okay because the share price is never a true reflection of the valuation of a company. And whilst the sheep are panicking, while the market is fearful, we will feed. And when the market is excited, we hold. Or we sell based on the share price. Right now, it's a feeding time because NEO is in its harvesting phase. Its harvesting period, where we've spent, the rest of our spending was done in the third quarter, which will be reflected in the earnings report this month. But in the fourth quarter, which we are in now, is all profitable, and that will be reflected in the fourth quarter. And these hedge funds and pension funds, asset management funds located in Canada, Europe, America, etc., they know that, and that's why they're buying in. So whilst you are panicking, the hedge funds and pension funds and asset management companies are buying because they understand what's coming. They are looking at what the company is doing and not the share price. I hope you guys found this video yet again on a Monday to be informational, inspirational, and motivational. So guys, don't forget to hit that thumbs up. Takes a lot of time to do these videos and the editing. And if you haven't yet subscribed, you might want to think about doing so, because in this channel we are waking up the middle class for the first time to get a major piece of the pie from the ground level up as to how the games are played on Wall Street. And like 50 said, we get rich or we die trying, guys.